Good morning, everybody. Happy Monday. It's June 10th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites, which we can bring to you every Monday and Thursday morning, roughly around 8:30 in the morning Eastern time. Talk a little bit about the markets, a little bit about the Fed, a little bit about things that have happened relating to markets, the economy, and so forth. So where are we at? Well, the S&P 500 is right near an all-time high. Closed a little bit off of it on Friday, but it did tag a new high last week, and I believe it was a closing high on Friday. Nasdaq also the same as well too. Dow Industrial's a little bit more challenged, along with the Russell 2000. And as we know, there's a very, very strong relationship between the Russell 2000 and interest rates, right? So let's take a look at that real quick. So you can see here. Let me bring up the Russell 2000. Actually, we can put that down over here. So you see the 10-year yield right here made its way up in April, and the Russell 2000 was actually down, and then it started coming back down. So there's an inverse relationship between the Russell 2000 and the S&P 500 and the 10-year yield, right? So let's see if we can do a comparison here for you. So we got the TNX here. Let's put the IWM here as well too. The TNX comparison to the TNX here and TNX and its charge point. Let's change that to IWM. And you can see the inverse relationship here. When the yields are going up, the price of TNX is going down. Yields going up, yields going down, IWM going up. So you can see the separation up here, right? Because the differential here. So interest rates are rising a little bit this morning, and we did see a big pop in interest rates last week on Friday. It was a pretty strong jobs report, but unfortunately, for the people looking for rate cuts, there was a strong labor report with higher wage gains. Our average hourly earnings were up. So even though the unemployment rate went up, ticked up to 4%, which means that slack is starting to build in the labor market, it's going to take some time before that actually has an effect. So what has a more direct effect right now on earnings, especially, is the higher average hourly earnings, which came in much hotter than expected on Friday. Does that mean it's a disaster for the markets? Of course not, because the job market is still strong. We had a better than expected employment growth on Friday for May. But, again, this is something that the Fed has been talking about. They're surprised, of course, by the strength in the labor market, but they don't feel the need to ease interest rates very, very soon. And we do have a Fed meeting coming up this week. It starts tomorrow. It will end on Wednesday with a policy decision. Highly likely, but 99% chance of a no movement on Wednesday when the policy is announced. Now, this is one of four big meetings that we have during the year, because they will be releasing their projections. They call it the dot plot, the projections of Fed funds rate, inflation, unemployment, and GDP. So the forecasting tools that they use at the moment will be putting out estimates of these with not just all the Fed presidents, but also the economists that support those districts. So it'll be interesting to see how much changes. Again, we had a first quarter of data that showed a lot of inflation and sticky inflation and lower growth in the economy. So a lot of people point towards stagflation. When you get higher inflation and lower growth, you get the stag period, and then for the lower growth, and you get the inflation part for the higher inflation. So we'll see if that has an effect on opinions from the Fed at this meeting that starts tomorrow. Also, we'll have what do we have today? We have a stock split, right? That's why I played Split Decision by Steve Winwood. We have a stock split on NVIDIA. They've split their stock 10-for-1. So you can probably see there's no mistake. The stock is not down 90%. It is now trading at about $120 a share. And if you had, say, 100 shares, now you have 1,000 shares of NVIDIA. See, the 10-year bond, of course, the yield we were talking about just a couple moments ago ticked much higher on Friday because of that hot inflation, and it's trying to get up towards 4.5%. Perhaps some bond sellers are out there trying to get rid of their bonds in front of the Fed meeting. I think that's probably a mistake. But do I think that interest rates are going to come down? I'm not too sure. I don't think they're going to come down too much, but I think that move on Friday was pretty much exaggerated. But we'll see what happens. We have earnings coming out later this week. We're back into like a lazy period of earnings. I call it phase 4. But we do have a couple of big names coming out. We have tomorrow after the close, we'll have Oracle. Wednesday after the close, Broadcom, and then Thursday after the close, Adobe, and pre-market before the open on Thursday is Signet. And last but not least, I will tell you that there's a big inflation report coming out. And Wednesday morning, the Fed will have the CPI number for May in hand. Thursday morning, we'll have the PPI number. Not a whole heck of a lot of other data coming out this week. Some sentiment numbers. Small business optimism comes out later on today. So one thing I wanted to point out towards is the Nasdaq new highs, new lows. We don't look at this too often, but from time to time when it's important. And we do see some red prints here in the new highs, new lows. So that's something to keep an eye on. So that's what's called a divergence. And a divergence is a signal. It's not an action thing that we have to do, right? So divergences often show up, and we just have to notice them, and they could certainly rehabilitate themselves, much like they did over here back in April. We had a very negative amount of prints in new highs versus new lows. Lots of new lows that were printed in April, and that eventually rehabilitated itself. And then we started seeing a lot of new highs printed in May, and we had that strong month of May. So weak month of April, strong month of May. So this is very much of an indicator here. So what's happening right now? So we see that some red prints coming out on the NASDAQ. Now, of course, the NASDAQ has been dragged up and pulled up by a lot of the Mag 7 names, I guess, NVIDIA, Google, Amazon, Apple, of course. So a lot of these names have been pulling up the rest of the markets. But you can see here clearly that those few stocks, a handful of stocks, maybe 7 to 10 stocks, are doing all of the legwork. And that is not a healthy condition when it comes to breadth, when it comes to markets, okay? Just keep your eye on this indicator, all right? And then what else have we got coming on here? I think that's probably it. So what I would suggest to you, again, you know what? I mean, if you have some gains on some things, take some profits. It's okay to take some profits. So it's okay to step back a little bit. I did a lot of that on Thursday and on Friday. Took some profits on some things. CrowdStrike is going to be entered into the S&P 500 in a matter of days. We do have some of that working for us in the chat room and also in the service. Also, keep in mind that later on this month in June, there's going to be a rebalancing in the Russell 2000. It happens twice a year, at the end of June and the end of December. We may also have some rebalancing happening in the NASDAQ and the S&P 500 too. So we may see more companies taken out of the S&P 500 and then removed and then replaced by other names. So keep an eye on that. And then finally, we do have a holiday coming up next week. Don't forget, Juneteenth, which is next Wednesday, is going to be a holiday where the markets are closed. So just keep that in mind if you're doing options. We have one fewer days in the month of June. Now, the June expiration is next Friday, the 21st. So we have 5 trading days this week, 5 full days this week, 4 days next week. So you'll have 9 trading days to trade options before the June expiration. So, again, take it slow, keep some protection on always, as always. Take some profits when you can. Find some new opportunities. Find some new ideas. I've always found that when I have a lot of cash in my accounts, that it seems that the opportunities open up for me. I get to see quite a few more of them, and they're much bigger, as opposed to when I have only a small amount of cash and I have to squeeze out trading and holding on names that may not work. Right? If something's not working, jettison it from the portfolio. It's okay, right? You can come back into it. And if it's something that you really like, and you're going to feel bad if you leave it, I promise you, if you jettison it from the portfolio, if you let it go, you maybe feel it for about 5 minutes or something like that. You step away, come back, and you're right back in the game again. So if you have any questions on anything, let me know. Please send this video out when you have a chance, either on X, Twitter, YouTube, or LinkedIn, or Facebook. And I will see you guys all back on Thursday. Have a great trading day, and it's Fed week, so be careful. Take care. Bye.